Hello, everybody, and welcome to the Great Divorce Podcast. Today, we're going to discuss equity compensation, an area that's not very well understood by financial advisors, certainly not very well understood by family law attorneys, but also, importantly, not always understood by the people who own the equity compensation or the spouses who may be entitled to receive a part of this particular financial asset. Here to help us understand equity comp is Laurie Itkin. Laurie is a certified divorce financial analyst and a former board member of the Association of Divorce Financial Planners. Laurie has worked on hundreds of California divorce cases, either as a financial neutral or as an advocate for one spouse. Her specialty is in the area of equity compensation, which is more than hinted at in the name of her financial consulting company, which is called The Options Lady. Laurie advises her clients and their attorneys on how to divide equity compensation, including restricted stock units and non-qualified and incentive stock options. Laurie, welcome to the Great Divorce Podcast.
Happy to be here, Andrew. Thanks for inviting me.
Very welcome, Laurie, and I'm glad to have you on because this is a particularly specialized area of finances and financial planning. And when it comes to the divorce world, an area that you may not come across a lot, but when you do, you realize that I've got something to learn here, and that could be the financial advisor saying that. The attorneys don't often say that because they don't even know that they have something to learn here. But this is a very specialized area of division of financial assets in divorce. And I think we'd probably be well suited to start off with the basics. And so, can you give us a brief overview of equity compensation and why this can be one of the largest financial issues in someone's divorce?
Absolutely, Andrew. Equity compensation is simply the fact that it's part of your compensation package. You get a base salary, maybe you get a cash bonus, and maybe you get equity in the company that can come in various forms. You mentioned some of them: restricted stock units, incentive stock options, non-qualified stock options, performance stock units. There's all different kinds, but the point is if you are getting divorced, and particularly if you're not the one earning these things, you may see that your spouse's W-2 at the end of the year, let's say it's $400,000. But they may say, I only make $180,000 because maybe that's their base. Well, the rest of this stuff is probably equity compensation. So it is imperative when you're going through a divorce that you understand it, or at least are working with somebody who understands it.
Yes, and also always as a financial advisor dealing with people going through divorce or an attorney, look at the tax returns. I mean, that's maybe self-evident, but also know what to look for in those tax returns because, as you mentioned, these grants, these equity grants, can be far greater than the actual salary.
And it's easy. You don't even need the tax returns to start with. The analysis can be very simple. Most people, if you look at their pay stub, you get a recent pay stub, you'll see the year to date pay in different categories. So if RSUs, restricted stock units, vested in March and today's July, well, the July paycheck may not have it, but it might show that year to date there was some paid.
Right.
And the W-2 usually shows you, and it's going to show you all the Medicare earnings that are taxed, or it's going to show you the gross revenue you're making, but it may also show you a breakdown of how much of that was RSUs.
Yeah, very important, very good advice, Laurie. So when we're dealing with equity compensation, and I've had a couple of cases where it's come up, and the attorney wasn't even aware. And so I said, we need to look into this because there's equity compensation. Oh, well, okay. And so we did. But for people who may be unfamiliar with this, there are some certain terms around equity comp. There's granting, vesting, exercise, selling, sold. Perhaps you could give us the 101 on what these terms mean and maybe And then we can get into the nitty-gritty about how they apply in marital property division.
Sure. Um, Most people, yeah, the most common forms of these are restricted stock units, RSUs. And basically, I'll just give you like the vanilla. You may have an employee who is given a grant of 100 RSUs, and they might vest over 3 or 4 years. Perhaps they vest 25% over 4 years. Well, they are going to be granted, but you are not going to get the same number of shares that were granted because the company will withhold estimated income and employment tax. So the first thing to understand is just because it says employee is going to receive 100 share units or stock units, they probably won't receive 100 because shares will be withheld to cover taxes. And furthermore, if you live in a state that has state and federal income tax, I know your state has no state income tax. My state, California, certainly does.
Sure it is.
The tax implications are huge, absolutely huge. And if the company does not withhold enough tax, guess what? You're going to have a huge federal tax bill at the end of the year. And if you're dividing these shares with your soon-to-be ex-spouse, you want to have a clue on what the taxes are because you may give your spouse too many shares in the division.
Mm.
Your spouse might like it, but you're not going to like it.
So, from my understanding, granting is essentially the company saying, hey, you're going to get 100 units over a 4-year period of time. So vesting is another word for getting, right? You're going to get 25 this year,
As
25 the
long
next
as
year.
you stay at the company, you have to be at the company to get them.
Yes. Yes, that's undoubtedly part of the employment agreement is that you've got to stick around to get these.
Right. And then if you get performance stock units, we see a lot of the biotechs have that. We don't even know if you're granted 100 performance stock units, it often is on a multiplier based not on your performance, but metrics for the company, such as if they're FDA regulated, did they pass these clinical trials? Did they meet this revenue objective? So you might have been awarded 100, but might end up with 0. You might end up with 100. You might end up with 200 if there's a 2x multiplier, which we cannot predict in a divorce situation until it's paid.
Okay. So these things vested, you get them. And when you get them, you may not get the exact amount that you were granted because taxes are withheld.
Right.
What's the exercise? What does that mean?
So it's less common in publicly traded companies, but they're still around. Options, stock options. There's two types, non-qualified stock options and incentive stock options. These are more complicated because let's say you were granted these. You are granted them with what's called an exercise price or a strike price.
Okay.
And often they are granted structured in such a way that these options will only have value if the company's stock price increases over time. So right now, again, I don't know what month and year the viewers may be watching this, but let's just say if we are in a time where the stock market is very high, and maybe we have a 10 or 20 or 30% stock market correction down the road. Well, holy cow, those stock options are probably going to be worth nothing until that stock price recovers.
Okay. Well, let's stick with RSUs because they are quite common and
Yes.
yet they can be rather tricky.
Yes.
So the employee's been given the grant. They're vested now. Some value has been withheld for taxes. So he or she, let's say he, has a certain number of stocks that are probably held in some sort of institution. Company stocks that are held at a transfer agent, they're typically called, or a company that holds these
Custodian. Yeah.
custodian, right? And so those stocks that are now held, you can hang on to them, you can sell them, right?
You can transfer them to your ex-spouse or soon to be
You can
ex-spouse.
transfer them to your spouse. exactly. But let's say you're not divorced yet. So let's say you just everything's happy and peachy. So they're at this custodian, they're held. Now you mentioned taxes a minute ago. Being very careful because vesting is a taxable event, correct?
So when the shares vest, the company will withhold estimated employment and income taxes. If you have not hit the Social Security limit yet for the year, they'll withhold Social Security. They're going to withhold Medicare. They may withhold extra Medicare if you make more money. They may withhold state income tax. They may withhold a state disability tax. And so that's that. Now, the secondary tax that you are alluding to comes into play once you're holding the shares, they've vested, you own them. There may be a capital gain or capital loss situation if you subsequently sell them, because your acquisition price will be the price on the date those shares vested. So you have to think when they're not yet vested and they do vest, we have to consider estimated income and employment taxes. And then once they're vested and you potentially sell them, you may have a capital gains liability, short or long. That's why I almost always recommend in a divorce situation that you transfer the vested shares to the other spouse so that you're not on the hook to sell these and then you get a 1099 and you got to pay the capital gains tax. Transfer it with that cost basis to the other spouse. They decide if they need the cash.
No, that's great advice. And let's just say, because this is the more simple process where you've already got the shares at the custodian, you're transferring them to your spouse. Correct me if I'm wrong, but this does not require what is commonly known as a quadro, a qualified domestic relations order. This is a simple transfer pursuant to the marital settlement agreement, or could be done prior to that.
Absolutely. And a lot of attorneys don't know that. They think you need a qualified domestic relations order. You do not. You're correct. There
Okay.
are cases where you may, when we get to, I'm not going to talk about these. There's always weird isolated instances, but 99% you can probably transfer these shares.
Okay. Now that's the pretty simple stuff. Let's move up to the second level questions on these RSUs because let's say some shares were granted prior to the marriage and vested during the marriage. Let's just use that example to start, and then we'll get even more complicated.
And that why, since you specialize in gray divorce, this is going to be a likely scenario. You have people on their second, third marriages or married or got married later in life, or we've got all these tech men and women in their 30s made all this stuff and then they get married. So every state's going to be different on this. And in fact, it's interesting, even though I'm in California where we have sophisticated and extensive case law on this, there are a lot of scenarios where it does not cover the case law. And therefore, a CDFA certified divorce financial analyst is going to be very important to look at equitable ways to divide this. And then the lawyer is going to have to figure out how the statutes or case law align with that. So but presumably, let's think of it this way. If we have a 4-year vesting period, and let's say you got granted the RSUs 2 years before marriage and they vest 2 years after marriage, well, then theoretically, you could say, well, wait, half of those were earned before marriage and half of those were earned during the marriage. So 50% of these are marital property when they vest, or community property, depending the state you live on. Now, the problem, Andrew, is that all these people are selling them, right? So they've been married 10 years. These things are sold. So I have to go in with my little forensic accounting cap on and look at every individual tax lot when these vested to see, Andrew, did you sell 100,000 of this when you got married to buy the house as a down payment? Did you pay off credit cards? Are those shares that you earned before marriage even still there?
Mm.
Because you can't just say, well, I have 3,000 shares. Well, when did you earn these shares? We need to put a little bow tie on every share of stock to see, is this the share that you got before marriage or after marriage?
Yeah, it can get complicated. And what about the vesting, let's say the shares were granted during marriage, but they haven't completely vested yet, and we're going through divorce. So there's some vesting going to be happening in the future, but they were
Mhm.
granted during marriage. How do we determine what's marital and what's separate here?
So here's where this is fascinating. Some states have adopted similar methods. Other states have their own method. You could compare California to Washington State, both community property states. They have slightly different calculations. You can look, so in California, the date of separation, the date the parties, or at least one party, has communicated to the other spouse that the marriage is over. They may still be living together. I don't want to get into all those details, but the point is that the divorce may not be for 1, 2, or 3 years after this date of separation. That's what we use as our dividing mark. In other states, like Texas, for instance, you might have told your spouse 3 years ago you want to get a divorce, but until that divorce is final, that non-employee spouse is still earning on your watch. They are earning half those RSUs.
Hmm.
So it is fascinating how the laws and case law have developed in various states. It's truly a laboratory of the states.
So, what do you recommend then to a attorney or even CDFA who may be working now? You operate only in California, and I'm guessing I'm beginning to understand why, because it can be pretty complicated dealing with RSUs in Texas or Washington.
Well, I do some Texas cases. I mean, it just, it's basically you want to make sure, and I've done some Oregon ones, you need to make sure that if you are an employee or the employee spouse, you just want to make sure that the person you're hiring has knowledge about how it's addressed in your state. Have they even done 1 or 2 cases? That's fine.
Okay, fair enough. So let me go back to the to something that may confuse attorneys or even financial analysts dealing in divorce. There's no quadro involved. How does it work with the division? And as I always say when dealing with 401ks, the plan document is the Bible.
Mhm.
Well, with RSUs and equity comp, is it not the case that as opposed to a 401k where you can set up an alternate payee 401k at Fidelity. Let's say your husband worked at Fidelity and you're getting half of his Fidelity 401k. Well, Fidelity will set you through the quadro, pursuant to a quadro. Fidelity will set up for the wife a 401k, alternate payee 401k at Fidelity. Doesn't work like that with equity comp, does it?
No, great point. So typically what I do is because in California, typically the separate property shares of the employee spouse that are not going to be divided as property with the other spouse, that's typically, we consider that income available for support. So my spreadsheets will show, hey, 100 shares are vesting. You're going to have maybe 60 after the taxes are taken out, and 87% is marital property that you divide as property, and maybe you transfer those shares. But the income on the separate property, what is the stock price of the company on the date it vests? That is going to be considered income available for child and or spousal support. And there is no roadmap, and it's very confusing. So honestly, my memos that I do with roadmaps are sometimes attached to the marital settlement agreement because
Hmm.
the parties need a roadmap. And furthermore, Andrew, very few people even will, it's very hard to make sure that both parties in the divorce are going to follow up on this. There's no Fidelity sending them anything. So sometimes they agree to meet with me once a year to make sure this stuff has been transferred and it's been calculated correctly.
Hmm. In doing a little bit of research for this call, I heard the phrase if and when language.
Yes.
What does that mean for someone who may come across RSUs and
Very
hearing about
important.
if and when language?
So you and I are getting divorced right now. Let's say you're the employee and there's a grant that has 3 more years to vest. And you're thinking, I'm not going to work at this company. I'm going to be out of there. I don't know how well, you're not going to pay me in advance for shares you may never get. It's if and when. If they come And when they come, you're going to pay me maybe 2 weeks after you get it, something like that. And so makes it very hard for what we call the out spouse. I hate that name, but it's what we call them, the out spouse.
Yeah.
They can't budget. They don't know what's going to happen. The only thing that is going to be the same every year is that spouse's base salary plus maybe a cost of living adjustment. So
Yeah.
what I find, Andrew, is that these families have been living on these $400,000 or $500,000 compensation packages, and yet they really should be living on the $200,000 salary because this other stuff may or may not happen.
I know. I know. It's just treat it like a bonus. Treat it like a windfall is I found is
Exactly.
good advice there. So you've been doing this for a while.
Yes.
I'm sure you've seen some classic mistakes couples may have made in splitting RSUs. Could you give us some of the highlights or lowlights that you've seen?
You're a client of mine and you want to keep the bill low. If you're in California, don't sell these things after the date of separation, because then I have to do what's called post-separation tracing. Because
Um,
remember, I'm apportioning. In California, we have the Hug and Nelson formulas, and some other states have adopted similar methodologies. They might call them something else based on their case law, but I've got a schedule that says every 3 months these are going to vest, or every 6 months, or every year. And if the divorce is not final and the employee is just selling some of this stuff, well, did they sell the marital shares? Did they sell their separate property shares? Did they sell shares to pay child and spousal support out of what should be divided as property? So I tell people, the minute you get separated, you come to me, because don't come to me 2 years after your date of separation. Otherwise, it's going to cost a lot of money. Now, other states don't have the date of separation, right? Like we talked about Texas, it's date of divorce. Oregon, very similar to that.
yeah, and after having done this for a long time, tracing is not something that you want to be spending your money on. It's not something really a financial advisor wants to do either. It's like maybe some like it. I don't like it.
Now,
It's
the
very
accounting people, look, I was a finance major. I purposely did not major in accounting. I majored in finance. So, but now I'm doing the forensic accounting. The other mistakes, but you talk about mistakes. The other mistake is particularly with the out spouse, not even being engaged to learn about these things. You
mm,
have to learn it, at least commit to having an eighth grade knowledge of these things. Because if you don't have an idea, and you choose an attorney who has no idea, and then another mistake people do is that the attorneys will double dip. They'll account the shares that are being divided. They may double count those for income available for child and spousal support, or alimony or maintenance in what state you are. And that is incredibly unfair to the spouse who's earning these things.
that's a very important point. And double dipping comes up also with annuities. But it's interesting that you mentioned that with RSUs. Yeah, that's something you got to watch out for. It's that's classic advice from day one of divorce is that for the person going through it, educate yourself as much as possible. You're not going to become an expert in RSUs, but if you have the basic understanding of how they work, you can come to your meetings with your financial advisor or your attorney well armed, and good questions may trigger something with them saying, that's something I need to look into, or I wasn't aware of that. I mean, I've seen that with attorneys just, bringing knowledge of certain things and say, oh yeah, we need to look into that.
That's
And
a great
ultimately,
suggestion.
pardon me?
I said that's a great suggestion, because then you're both, ensure that issues are being addressed, looked into, all that.
And so, this is one of the reasons why I'm a big proponent of having an emotional counselor on your team, because obviously the emotions of divorce don't lend themselves to logical, sound, rational financial thinking. And heck, you throw restricted stock units into the equation, that's even more complicated.
And the
So
stock options are way more complicated than the RSUs.
yeah, oh yeah, for sure. So We're talking about being part of the process, being educated. Um, I know from my standpoint, and I've seen this with attorneys as well, and I've seen this going through my own divorce, that the more the client can have the documents ready, be prepared, bring them to the meetings. It just makes the advisors work easier. It makes the attorneys work easier. And we're humans, advisors, attorneys, even attorneys are human. They want to help the person, and they're more inclined to just feel good about working with a person when they bring them organized paperwork and good questions. Don't you agree?
Absolutely, but that's, a high demand because as we know, most of our clients are so overwhelmed and they're in the business of running their lives. I mean, they don't have time for a second job of managing their divorce. So I think, for professionals like us, we really have to have a balance in that we want our clients to be organized and prepared, but we also have to show some grace when they simply are not. And that's what we do. We try to help them get prepared.
Certainly. But the next point I was leading to is that the more organized and prepared they are, the less it's going to cost them
Oh, yes.
because we're not going to have to go rooting around and trying to discover material if it's presented to. Now, of course, we want to be presented on a silver platter. It doesn't always happen, but for the client, it's going to reduce their billable hours. They're not going to be charged. It's going to be less expensive for them.
Absolutely. And, something that I've done that has reduced billable hours for people and their attorneys is that in California, we have a case called the McElwain case dealing with stock options. And it's really interesting because, especially if you're an executive, you may have blackout dates where you can't exercise these options, you can't sell stock. And what happens is that when an option is in the money, meaning that the exercise price is less than the stock price today or whatever the day is, and there's profit that could be had, there could be a sale and a profit. If the employee is not exercising those options, that's money that's not available to be paid for child and or spousal support, maintenance, alimony. And so that's the attorneys can be spinning their wheels on that. And that's why it's really good to have a CDFA lay that out and say, hey, at this price, these things are worth 20 a share. At this price, they're worth 50 a share. Right now, they're worth 0 a share, but we got to look at this in 3 months to see if they're worth anything.
Laurie, we're both CDFAs. We recognize and our clients recognize the value that we bring to the process of working as the financial specialist, working with clients, attorneys in divorce. How much is this going to cost?
How much is what going to cost?
How much are we going to cost? How much are you going to cost?
Oh boy, that totally depends, as you know. But typically, I mean, I'll just tell you, typically, if it's just a straightforward RSU analysis, they can take. I always have a spreadsheet laying everything out. I always have a memo that I draft in layman's terms so that everyone can understand, the employee can understand, the spouse can understand, the mediator can understand, the lawyers can understand. Typically, it's 4 to 6 hours. If it's options, it adds on. If there's been a long time between date of separation, that adds it on because then I've got to do the tracing. So I try to best understand the party's circumstances so that I can quote them what I think it will take me.
Okay, that makes sense. If somebody's interested in hearing about your services, now, we talked about this previously. You're principally in California. You say you've done some Oregon, you've done some Washington,
And Texas.
Texas. Yes. Um, how do people get a hold of you, and should they if they're in Arkansas or Maine?
Great point. So I always like, we have colleagues around the states, and I always love to, make sure my fellow colleagues have lots of business. So if you are outside of California, I suggest you find somebody in your state who is knowledgeable about this. If they're not knowledgeable about this issue, feel free to contact me. And the best way to get a hold of me is at my website, theoptionslady.com. Theoptionslady.com.
Terrific. Is there anything else that you'd like to add, Laurie, before we wrap it up?
Just thank you for having this podcast, having this YouTube opportunity, because it's such a dry issue and such an important issue. And hopefully we made it entertaining for folks to watch.
We gave it the old college try.
Okay.
Thanks very much, Laurie.
Thank you, Andrew.
Thanks so much for tuning in to this episode of the Gray Divorce Podcast. To learn more or get in contact with your host, you can visit Andrew's website at transcendretirement.net. Also, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Thanks again for listening, and we'll catch you in the next episode.
Information provided is educational only and should not be construed as legal or tax advice. Each situation is unique and should be discussed with your tax or legal advisor prior to implementation. Andrew Hatherley is not an attorney and does not provide legal advice. Information provided is financial in nature. Advisory services offered through Hatherley Capital Management, LLC. Divorce Financial Analysis services offered through Wiser Divorce Solutions, an affiliated company.